Hey everyone, hope you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to dive through Twitter, see what people are sharing on social media, generally related to three topics: wealth building, commodities, and or financial topics. So let's dive in here. Let's see what's going on, what people are sharing. You can find me at finding_finance, and you can join our community at finding-value.com. You can see the discount coupon code LEAP in the description link below. If you want to join in February, you can use the leap year code LEAP. Coming on down, how many of you think uranium stocks are a great short right here? I don't know if this guy is trying to get people to say, but by uranium stocks, you mean fraudulent explore companies that will never become actual mines. Then sure, but you can short those just about any time. Yes, I think so. You sure? New all-time highs, characteristic of a downtrend. Yeah, I would not be shorting uranium stocks. That's just me. But I could see that some of the companies that are exploration companies not making any money, yeah, someone could always come up with an argument of why someone should short that. Share dilution, et cetera, et cetera. They are risky little companies, but that's not my game, guys. There's no way I'm touching a short side there. Gary says, I'm absolutely positive if that I could control the media and pump out ads for dehydrated water over and over and get actors and famous people to endorse it, I could eventually convince the majority of humanity that dehydrated water is the next great thing and get people to buy millions of bottles of it. The inability of people to think rationally when it goes against the crowd is why most people are on the wrong side of the markets at major turning points, and why so many people can be convinced to believe completely ridiculous things like wearing a paper mask to protect against a virus, or that a microscopic level of CO2 is controlling the climate. I completely agree. It is very hard to buy stocks when everyone else hates it. I mean, it's not hard for me. I mean, I've been doing it for a while. It's like, whatever. But most other people cannot think outside of the herd. They are in the herd. And then there are people that like to associate with groups. Oh, I'm a uranium investor. And they start to label themselves something. And then they have to be a part of that group. It's almost like they have to be a part of something all the time. If you want to be a really good trader, and not just a trader, an investor, and buy when people are in fear, you got to step out of the crowd. And when the crowd is all on one side, yeah, the crowd right now is all go buy a bunch of Nvidia, go buy a bunch of tech stocks. Those tech stocks have not outperformed the majority of my oil holdings. And with the risk that you're taking over there, good luck. Good luck. And that's looking at it from 2020 onwards. Big picture, 30-year inflation adjusted oil price. Good entry at the bottom of a very strong channel. I think the post 2014 channel is a shale phenomenon. When shale rolls over, I think we go back to trending above the top line. I agree with this. Actually, I'm in very much agreement with it. So this here, down here, where we stayed, this is the shale, the big shale production that came online. I think that we are actually going to go up here, and we could do an overspike first, where we go to like 350, and then we'll pull back to maybe like 160, $180 a barrel. I think we are going to go to another level, which is this level up here, and trend above trend up here for a good long time, maybe even for the rest of our lives. I don't think that there's as much oil in terms of how much we can flow at $73. There's no way. We're going above 100. We'll probably be 150, 160. We could fluctuate back and forth. We could overshoot dramatically to like 350 at some point with a credit expansion phase and a supply constraint. Easily doable and easily seenable. And I think that's coming. I really think that is coming. And I think that this fractal here, this fractal is the same fractal over here, and this one's a lot larger than last time. I think we're going to go way higher from bottom to top with this size of a fractal lead-in. This fractal here is this fractal here. And the lead-in pattern is the same lead-in pattern here. It's the same cycle. We're going to go to like 350, 500, and then we'll settle back probably to like mid 100s, low 200s or something like that. That's my guess. And that's over a long period of time. I'm not stating that that's going to be next year. It's a process, guys. We're going to hit like 350 towards the end of the 2020s, and then it will settle at a higher level in the 2030s, is what I'm like trying to communicate here. It's not next year. The U.S. economy is likely headed for another roaring 20s of rapid growth per Ed Yardeni. That could be the case because in the roaring 20s, we had a large demographic in home buying years. They had a big, gigantic bubble in real estate in the mid 1920s. And in the mid 1920s, it started to fall apart mid to late 1920s. And the aftermath of that credit contraction, the deleveraging event of credit being destroyed, occurred in the 1930s, late 1929 and 1930s. Athabasca Oil, the missing week, January 29 to Feb 5th, acquisition of 3.5 million shares and cancellation of low 3.9 million shares for approximately 17.2 million. They're buying back shares, baby. Let's shrink the share count, boost the share price. This is the most effective way to increase earnings per share if you've got spare cash that you don't know what to do with. You just buy back shares, increase the earnings per share, and drive the stock higher. Shareholder friendly company there. Here's another one. The EIA now forecasts nearly 1.5 million barrel per day increase in global oil demand this year. Something like 600,000 of that is supposed to come from increased U.S. production. Indications are that forecast won't age well. Are we at a peak in oil production right now? That is a good question. I don't know. And with oil where it's located at $72, $73 a barrel, what a steal. What a steal. U.S. EIA raises forecast for 2024 world oil demand growth by 30,000 barrels, now sees 1.42 million barrels per day year-over-year increase. This is going to get interesting, guys. Willem says, colossal central bank buying. When the money printers start fleeing towards gold, it all started after the Lehman crisis when it became obvious the U.S. emperor was running around without clothes. The World Gold Council. Central banks continue to buy gold at near record levels. Gold mine supply remains sluggish. Central banks purchased 1,037 tons in 23, just 45 tons short of 2022 record. The People's Bank of China was the largest buyer in 23, adding 225 tons to its holdings, and in 2023 was the country's highest single year of reported additions since at least 1977. And this is the colossal central bank buying that is occurring for gold. Scrolling down, gold breakout backtest complete. Now do we go to the moon? He's got a contact arch point where we could potentially send this thing to the upside. Yes, I also think silver is going to rip. Yes, I think platinum and even palladium could rip all at the same time. Let's get this thing mooning, guys. Let's do it. Time to look at Canadian energy stocks. We're about to enter the seasonality strength. We've got February here where it strengthens. We get a pullback. This is just what this is a three-wave move. First wave, second wave, third wave, fourth wave, fifth wave. And then we go and consolidate for the rest of the year. Big moves occur from February to June. Net gas demand will be volatile over the next 2 weeks. Withdrawals will reach a near-term high today at minus 18 billion cubic feet per day, before tumbling to just minus 2 billion per day this weekend as unseasonably mild air shifts east. Demand will then steadily rise next week as widespread cold. So this is basically running draws, and then we get a big draw towards the middle end of February. 3 to 6 months of expenses is an emergency fund, not FU money. It says, do you have FU money? FU money is basically 3 to 6 months worth of living expenses saved in a bank account. That way, if it's not working out at your job, you can tell your boss to go F themselves. It's okay. Guys, that's not FU money. FU money is having enough money to run a good chunk of your life where you don't really need to worry about money. That's what I think of FU money. 3 to 6 months, you're going to be desperate to find another job because you only have 3 to 6 months worth of living expenses. That to me is like you're cutting on the edge there. What I would consider to be FU money, maybe 10 years worth, 10 years, 20 years worth of money, that is FU money. And then having a sustainable dividend that you can get paid where you're getting an income from investments, that is FU money, where you get 80 to $100,000 in dividend income. I don't care how much money you have invested, but if you got 80 to 100 grand in cash flow dividend income, that is FU money, at least the way I describe it. There's an artificial downturn in the platinum and palladium price. The investors don't know why there's a downturn. They just know there is. So they hate platinum and palladium. I love hate. That is exactly what I'm implementing in my investments. I'm going to the spots where everybody hates it. Oh, that hasn't gone up for 12 or 14 years. Oh, Russia's been offloading their platinum and palladium assets to raise money for a war. That's going to stop at some point. And when it stops, that hate is going to turn to love. And platinum and palladium, I think, will do very well. Oil demand continues to be very strong, and there's not very much spare capacity outside of Saudi Arabia. Really. So capacity is tight. People don't know that. I do, and I'm positioning for the big move in oil. It's going to be big, boys. It's going to be big. Waiting for the CRB blue pattern to break down. It came. Knew then it was a false break and that a new commodity supercycle was close. Then called the 48-year commodities bear market low in April of 2020. The baby bull move went 220%. Now, in the first big retrace, which is perfectly normal, we've got a big move coming here, guys. And this, guys, this is going to change your life, in my opinion, if you can ride through this volatility and load up in companies that are cheap right now. Commodities are going to do some ridiculous move. We can see it in the silver charts, the gold charts, even the oil charts. It's coming. Now, the question is, oh, well, when exactly? Doesn't matter. I'll be in it. I'll be riding. I'll wait for that big move. Crude oil seasonality, much like the seasonality in Canadian oil and gas, but it goes to the beginning of July from February, right where we're at today. Crude seasonality is going to kick in here, hopefully. And that's where demand kicks up for summer driving, spring and summer driving. And that's where inventories are going to start to really draw down even more than what they've already drawn down. Momentum structure, he says, this is, what's his name? Michael Oliver. I'm sure everything's fine. We have a wall-to-wall Fed president speaking every single day. Jay Powell on 60 Minutes. More banks collapsing. Yellen says regulators are on it. LOL. Everything is fine. Don't worry, guys. That's why they're plastering our TVs with their faces 24/7 now. It's called panic, boys. It's called panic. They're panicking. They're panicking. They're not going to be able to hold this stuff down, guys. We're going to get a big move. They're going to panic. They're going to print money. And then they're going to send oil and uranium and all these different commodities to the moon because there's a shortage of them. There is a shortage. People are going to notice. I'm just going to say that. They're going to notice. Brazilian equities are trading at 5.5 times forward cash flows. Compelling macro and technical setups I've seen. In fact, on a free cash flow yield basis, these stocks are even more undervalued than they were during the depths of the global financial crisis. And this is Brazilian equities free cash flow yield. It's way up there. This is going to rip higher, guys. When we get a dollar weakness and the real starts to firm up, and then we get a commodity shortage, this is going to be huge for Brazilian equities. They're going to rip. They're going to rip it. Rip it, Lotto, rip it. We've got platinum and palladium potentially putting in a bottom now or soon. Anglo Platinum sees price recovery right around the corner. They say the platinum industry is at a low in terms of prices, but recovery is around the corner. Duncan says, chief executive of mining giant Anglo American. He said on the sidelines of a mining industry conference in Cape Town, South Africa, I really do believe this is a cycle and we're at the bottom of it, he said. Although he doesn't expect any full-scale mine closures at majority-owned unit Anglo American Platinum, the world's biggest producer of the metal. All of the Anglo Platinum mines will need some restructuring due to the current low prices, he said. So they're currently restructuring. They're going to do some layoffs. They're going to restructure this stuff. It's going to happen at Anglo. It's going to happen in Impala and all these other mines. But I do think that in 2024, we are at the bottom of the platinum, palladium, platinum group metals cycle here. There's a huge opportunity if anyone's looking. And that's where I'm going to end it, guys. So that's what I've got for today. Give me a thumb up for the content. Subscribe to the channel. Subscribe to the website if you guys want to know how to play all of these different plays that we've got in the markets of commodities. I've got a bunch of different equities that I'm playing this with. I think I'm playing it with probably some of the most leverage. It's real volatile in the short term, but I think it's going to give us a whole bunch of upside to play all of these different ideas that I've been sharing today. But that's what I've got. We'll catch you next time. This is Finding Value.